when technically I had gotten about maybe 4 or 5 different confirmations that we were entering the final phase of this currency's life cycle. And I came to ITM, it was actually June 28th of 2002. So that, and then the final confirmation of where we were in that trend cycle came in October. I think it was October 9th, but I could be off a few days of 2002. So when you ask me that question, since I'm looking at patterns and cycles, what I saw then, yes, we're much worse off because we are that was the beginning of the end of the fiat money experiment. And now we are at the end of the fiat money experiment. And, you're talking about all the massive amount of new debt that's been put into the system, not just over the last 20 years, but look at it over the last year and a half. It was just a big excuse to really flood the system with new money. And honestly, what you're looking at is every time a central banker prints new money, the money that's already out in circulation loses a lot of value. So even when you're looking at those returns, since that's gauged by the spot market, which is a contract on gold and a contract on silver, easily created, easily manipulated. The reality is those spot markets do not reflect the true fundamental value of an ounce of gold or an ounce of silver. If it was in a true supply-demand market with central bankers accumulating gold, especially, actually, I could be off on this because obviously I don't have the graph in front of me, but central bankers stopped selling and leasing gold in I think it was 2006. So before the great financial crisis, there was already a shift in central bank sentiment and buying and they don't buy the contracts, they buy the physical metals. So, I mean, if we were in a truly free market, then you would likely see gold somewhere in the vicinity of 50,000 an ounce and silver somewhere in the vicinity of 600 or so an ounce. And so I could tell you this, I am not converting my gold. And I bought, I remember buying silver at like $4.38 for one of these little peace dollars, right? Now I think I don't really work in that area anymore. I mean, I keep buying, but I don't really pay attention to the fiat price because I don't care. This is my insurance and I know it's severely undervalued. So even if I'm spending, $35 on that now, or even 55, it's still severely undervalued. And that's the only kind of risk that I really see when we put wow, it's done this much every year. What are you going to do? Convert it into, paper that is really worthless? Well, and there is a big part of me when you talk about Paul Volcker, there is a big part of me that wonders if that wasn't part of the plan to give themselves enough ramp room by having those interest rates so high so that every time we got into a recession, well, what did central bankers do? They dropped interest rates like 5.5%, 5.75% to stimulate borrowing and spending. But now we've seen a lot of emerging market countries in South America and elsewhere in the world that have tried to fight inflation by raising the interest rates. And guess what? It's not working. It's like a spring. You hold your hand on a spring and you can keep that spring down. But at some point, it either builds up enough friction that it pushes your hand away.
Yeah.
Or I think in government's case, when they need to reset everything, then they remove that hand. And that's why when I was saying going up, 3,500% or more, I mean, we have recent examples of that happening. Yeah. A suppression, and then boom, 3,500, 7,000%, you know, but what that also means, and what you're talking about, you know, how much has that currency gone down in purchasing power value? That's really what gold is reflecting, even as they've been suppressing it. This morning, Fed Chair Powell and Janet Yellen were in front of the Senate Banking Committee, and he actually agreed with me. Now, he didn't use my name specifically, but he is taking transitory out of his discussion on inflation. And he has admitted that it is stickier and higher than they expected. What a shocker. But don't worry, because 2022, it's going to magically just go down. Yeah, I don't think so. I think it's way stickier than what they're anticipating. And I think we're at the start of the hyperinflation.
Yeah. Yeah.
I mean, I don't have technical confirmation on that yet, so I have to say that. But in my gut, that's what it feels like to me. Yeah. You hope for the best and you plan for the worst. You know, that's what you do. You hope for the best and plan for the worst.
Very, very true.
And then you're covered. You know, if I make the money, I make the rules. He didn't say it like that, but, you know, you get the gist of it. Yep. And I think that's what Egon was referring to, because it really is about power. And yeah. Now, is there any way to change it? Yeah, if we stand up and we refuse to use what they have in mind for us, which is the central bank digital currencies that is programmable flipping money. We want you to spend. Okay, you watch your principal evaporate as you're looking at your account and you're not doing anything with it. Well, then what are you going to do? You're going to go out and spend on anything, won't even matter what it is, because you're trying to hold on to the wealth that you worked for. That's what money was created originally so a society could specialize. You know, that means you're getting paid for your labor in this fiat money that by design loses value over time. So you can't save it. And one of the primary, in my opinion, one of the primary functions of money is to hold its value over time so you can plan for the future.
Yep.
So yes, I mean, evil, I agree with him a bazillion %. It's despicable. It's disgusting. And this is why we have global income and wealth inequality by design. Gold is used in every single segment of the economy. So 100% of the time you have demand. If an economy is slower, you'll have a little less demand. If it's heated up, you'll have a little more demand. But with fiat money, it's used in one place only.